All right. Good morning, Trade Pros. Sound check. I hope you've had a wonderful, fantabulous, great weekend, and you've had fun. All right. This is the last week of June, the last trading week of June, and the last calendar week of June. A little bit different today in the YouTube update. We are streaming live directly from the Zoom portal, so you're not going to see my face. I'm going to have it fixed for tomorrow. I spent all weekend with the kids and the family. It was really hard to get a chance to fix this camera, but it's odd because the camera works everywhere. Like if I put it on Zoom, have a look at this. You'll probably see it on YouTube as well. It works. All right. The camera, I'm going to keep the camera on. You can see my hairy chest. I have this like really big, deep V-neck sweater. It's okay. It's, it's manly. Identify as man. So I don't know why it doesn't work on YouTube. I have to figure it out. Maybe use a different browser just for the YouTube updates. But good morning. Hope you had a great day. We're going to talk about a few things. And the benefit here now on YouTube is that I could actually share my screen with you. Although I'm having some connection issues at the moment as well. So keep that in mind. Okay, so the week ahead, we got a pretty busy week ahead. We'll talk about a few things, Russia and oil and how it impacts energy in Europe. We'll briefly mention that, the latest developments. Then we're going to take a look at the economic calendar for the week to know what to expect, because today is a different week than you would expect. It's a little odd. I'll explain to you in a second. And wrap up by a little bit of a look at the markets, and I'll even give you some levels on this chart that you're looking at the moment, because in the trading room, which is what you're getting a feed from at this particular moment from Zoom, this is how we start. We start at a higher, longer term view of where there could be support or resistance, and then we build a day trading plan off of that. So let's start out with Russia. Russia at the moment has defaulted on a payment to the United States, okay, on their international debt, rather, not to the United States. It's for 2 euro bonds that expired on Sunday. Now, Russia has the capital, and he said, who is he? Finance Minister Anton Siluanov said that anyone who understands the situation knows that it's not a default. There's money, and there's also the readiness to pay. This situation is artificially created by an unfriendly country and will not have any effect on Russia's quality of life. That's what the quote was. So what happened is they blocked the system for Russia to make the payment, so it ended up going into default. So they, even if they wanted to, they couldn't. It's an economic escalation, not a big one. I don't think it's a big surprise. Russia can't borrow internationally anyways, so to default on a payment doesn't really ruin their current finance situation, but it isn't good. All right, it's definitely a little bit of deteriorating tensions. All right, over weekend, we had some... one second. Here's News Squawk. All right, so that meeting tomorrow might be big for oil. See how that just flowed in to the market? That can have some pretty big oil implications. All right. Also, there's a G7 meeting underway. The 7 biggest countries that are part of G7. All right, and they're talking about capping Russian oil consumption and then importing or banning imports from the sale of Russian gold. They're looking to take the economic tensions up a little bit higher. So watch for that. I think that could create not really a tradable event, but I think a retaliation from the Russian front, if it affects stock markets, could be a blowback that we should pay attention to, certainly in the coming days. All right, so that's where we're at. Escalations there. In terms of the markets overall, in Asia, everything's up. We have quite a broad rally in the stock market. I'm step ahead of these guys. I'll post that for the team in our trading room. Their summary is pretty good. Okay, so let me just turn it down so there's no more interruptions in the News Squawk. Markets are up across the board in Asia and Europe, same. In the United States, futures also up across the board, not as much as Asian session. Okay, about a half percentage point. Crude oil is up 1/10. The gold is pretty much up 6/10, and Bitcoin's up 1/10%. So sleepy and slow start to the week, right? And you would think, hey, that's fine because this week is the big non-farm payrolls week, right? The first Friday of every month. Wrong. This week is not non-farm payrolls week. It is actually next week. Let me share this. If anyone's looking for a free calendar on YouTube, by the way, this is a great place to go and get it. It's called Forex Factory. I know it's Forex, so you don't have to trade currencies and make use of this. One of the best calendar tools for a review. Not really good for in the minute news because it's a little bit slower and they don't give you all the information. They just give you headline numbers. But it's cool because you can see here OPEC meetings are happening Wednesday. You could click it, get some more analysis here. You could also see a chart of all the last data and what's happened. It's interactive. You can interact with it. Shows you revisions, forecasts, actual numbers. Cool chart. Thought I'd show it to you now that I can because I'm screen sharing on YouTube instead of my face. So that's OPEC meetings on Wednesday, and there is no non-farm payrolls this Friday. How come? If it's the first Friday of the month, I thought it's every first Friday. I do always say this, the cautionary note. I do say it's usually the first Friday of the month, but it's not always. I might get this wrong. I can't tell you how many times I've tried to memorize their rule, but something where the 12th of the month occurs to be after the second Tuesday happens, then that rare time, it's the second Friday of the month that they report the NFP. Basically, if you think about it, they need time to prepare this report. I think that's what it's about. All right, so we are not getting non-farm payrolls this Friday. It will be next Friday, though. So this week, we have a couple medium tier events today. We've already got the core durable goods orders. G7 meetings kicked off today. They'll be also going on tomorrow. Okay, Wednesday, we have OPEC meetings. That's going to be pretty heavy for oil. All right. Also on Wednesday, we have some Fed speak. Jerome Powell will speak in the U.S. And I don't really like this website for details on what they speak about. I use the other one that you hear the squawk from. But I participate in a panel discussion titled Policy Panel at the ECB Forum on Central Banking in Portugal. So Jerome Powell is hopping on a plane to go to Europe. Hopefully his flight is not delayed and or canceled, but he probably flies private, okay? Because he's got all that taxpayer money and he can just print his own money anyways. Why does he need a commercial flight? So that's happening on Wednesday. That's going to be pretty important, 9 a.m. because it's in Europe. So it's going to be a pre-market event. Thursday, U.S. has core PCE price index. This is what the Fed looks at for inflation. Super important. That's going to be at 8:30, 1 hour before the market. Expect this to be the event of the week, hands down, especially with so much Fed policy change and so much focus on the Federal Reserve. Okay, so that's going to be it. Mark it on your calendar, Thursday at 8:30. And Friday, we wind down with another important indicator is the ISM manufacturing PMI. So busy week ahead, but it starts to look really slow. So let's answer the question here that I asked in the title of this YouTube. Is this a bear market rally in the stock market? Well, to put it simply to you, yes. Yes, it is. Okay, and I'm going to show you why so far it's a bear market rally. All right, if you go back, as far back as this chart goes, and I could go a little bit further back, but what you're seeing is lower highs and lower lows. Okay, so this is essentially a downtrend. The textbook definition of a downtrend is lower lows and lower highs. So yeah, it is likely a bear market rally. Where will it start to drop from again? And that's a good question. Now I'll give you a few levels. I'll tell you this: until we get above 4,200, the stock market's bearish, right? So it could get up to here, it could get up to here, it could look all great, and it's still not on a new upswing until we break 4,200. That's where you got a lot of buy stops from a lot of these shorts coming in. All right, so keep that in mind. Below 4,200, the expectation and nervousness is to the downside. So where will we see this bear market rally end? Well, the prior wave down completed, and we retraced to about 2/3 of the way, and the first volume area accumulation towards the bottom end. So if that's any indication, I have two areas of identified here for you. And I'll give it to you guys. Keep in mind, this is futures. All right, so you're going to have to convert this to SPY and SPX levels if that's what you trade. Okay, I think this one here is it at the moment. This is why we have these two gray zones, 39.23. This was a big resistance, big value area consolidation in here. It's not a surprise the market slowed down and has hung around here for 3 days now, right? Considering these last 2 days are the top and this is a consolidation day. So I think despite the bullishness, we get a pullback that comes into 3,800 to 3,840, maybe a little bit higher. All right. And then that's still an upward wave. But if we could break 39.60, the next level is 4,020. All right. 40.20 up here is a good resistance. Okay, and that's where I think the bears really step in and try another wave to the downside. All right. As long as we stay above 37.60, this has bullish inclination to continue higher. All right, so let's review these levels really quick. 4,200 is the marker for a continuation of the bear market rally. Above here, you start to expect a potential new bull. Below there, this is one level to watch for, and the last one's 48 to 41.20. All right, and these are all supply levels where you would expect to see some selling. All right, for this wave up, the bulls got it as long as we stay above 37.70, 37.80, but we may get pullbacks. So on today's trading plan, we're going to look for that pullback. All right, everybody is long. Everybody is expected to continue up. Pretty bullish and happy close on Friday. Today is Monday. It's a little different, and I think there's a little bit more risk and skew in the market. All right, so that's your update. I hope you enjoyed it. Let me see the comments. What you guys are saying. Not as many comments. There's less comments when you could see my face as a full screen. Actually, I look pretty good right now. I got a haircut, if I might say. I'm clean. My boy JD from our trading community keeps me fresh and clean. And I went for a new style that's not all that different. Subtleties, guys. Subtleties. Morning, Logan. Jay Greasy. Let's get it, brother. My crypto pie. Hello, everyone. Walt, what's up, brother? I'm going to reply to your email. I did see it. I'm sorry. This weekend was a blur. So now that it's a work week, I'll get back to you. Pandy, yo. Later, YouTube. Love you guys. Thank you for being with us. Let me know if you like this format better, because I'll be honest with you, it's easier to do. The only thing is I can't give you an alert ahead of time. There's no link created until I go live off of Zoom, and therefore you guys wouldn't know about it until 9 a.m. You just have to be on the channel and you'll get the notification bell. But if you guys like this format with a little bit of screen sharing and less of my face, I will not be offended. Just tell me and I'll do whatever it is that you find valuable. I love you, trade pros. You guys have a great day on YouTube. I'm going to catch with you tomorrow. Good luck, good trading. And remember, I think we get an early morning sell-off and late afternoon potential rally. Let's watch for it. You guys take care. And I will see you, Toms. Later, guys. Ciao. Let me stop.